Welcome to the Lend Academy podcast, episode number 277. This is your host, Peter Renton, founder of Lend Academy and co-founder of Lend It Fintech. Today's episode is sponsored by Lend It Fintech Digital, the new online community for financial services innovators. Today's challenges are extraordinary, with the upheaval affecting all areas of finance. More than ever before, we need to come together as an industry to learn from each other and make sense of this new world. Join Lend It Fintech Digital to connect and learn all year long from your peers and from the fintech experts. Sign up today at digital.lendit.com. Today on the show, I am delighted to welcome Joe Bayen. He is the CEO and founder of Grow Credit. Now, Grow Credit is a pretty new company. They've only been around for about a year, but I think they're super interesting. They have a unique product for people who want to try and build their credit score. And it's a real credit card, a real MasterCard that is free and that you can use only for subscriptions. And we get into this in some detail. But it really is it's a unique product that they have, and it does help people, grow their credit score, as the name says. So we talk about how Joe sort of got the idea for this, how it evolved, the mechanics of how it works, the types of partners that they're working with. We talk about how they're growing the business and the different types of revenue, and also what his vision is for the company. It really is. They're a unique company and they have a unique vision, I think. So. It was a fascinating interview. Hope you enjoy the show. Welcome to the podcast, Joe.
Hey, how are you?
I'm doing great. So I like to get these things started by giving the listeners a bit of background. You've had an interesting career so far. So why don't you give the listeners some of the highlights?
Yeah, so a very unusual background. First of all, I was born in Cameroon in Africa. Raised in Paris in France. Moved to France when I was 2 years old. And then as a senior in high school, I decided that the United States was the best place for me to be. So, I decided to run track as a senior in high school and I fortunately finished fifth at the French Nationals.
Wow.
Yep. And, that's how I booked my ticket essentially here. And I ended up with a full track and field scholarship at the University of Miami. So,
wow.
Yeah.
That's a great way to do it. If you've got the sporting ability, that's a great way to get your free education.
Yeah, exactly. Yeah. So I went to Miami. I graduated in international finance and marketing there, and then after that, my entrepreneurial journey just started in a very unusual way, where I met my first boss on a train, actually in Paris, on the way to Clermont-Ferrand, which is a city in the middle of nowhere in France. And they built an amazing technology that was literally 20 years ahead of their time. And the name of the company is Allegorithmic. And they built procedural textures for After Effects and Photoshop. Basically, it was it's a design and a texturing platform, for special effects for movies and video games. They were really ahead of their time back then, and most of their clients were out here in LA. And we met randomly on the train, and we talked, and I told him that I had a marketing and finance major, and maybe I could help him out. And he invited me to his office, and it took me about 6 to 8 weeks to learn their technology, and they gave me the gig. So
wow.
I flew back to Miami and then travel across the country to LA to start helping them with their business. So that's how it all started. And the company actually was purchased by Adobe last year, one of the biggest acquisition in France. So it was, I was employee number 8, I think.
Yeah. Wow.
Yeah.
That's great. It's a great story. So maybe tell us then a little bit of the origins of Grow Credit. Where did that start?
So Grow Credit is an amazing story. First of all, when I came to the United States, I went to college. I didn't know anything about the credit score system, the credit cards. I was offered a card, of course, and I was late here and there. And it took me about 4 or 5 years to rebuild my credit score. So in 2010, I started a company that was called freeappday.com that did really well. And unfortunately, Apple had to change their rules, and they basically kicked our industry out of the App Store. We were the largest iOS app promotional platform back then, and Apple changed the rules to prevent apps from promoting other apps in the App Store. So we bootstrapped the company to $18 million in revenue. And all of a sudden, we're generating $500,000 to $1 million a month, and instantly, we had to essentially close shop. And I went on to work at the VC fund called Science Inc., and they're pretty famous for having seed funded Dollar Shave Club, which was purchased $1 billion by Unilever a couple of years ago. And so I was there for about 2 years to really teach them anything related to promoting apps in the App Store. And then Venmo became popular, Acorns and Robinhood and all those fintech apps started to become popular in around 2014. And this is when I thought that, this could be a good idea to basically help my younger self, by introducing micro-lending over the phone and credit score education as well. So, I partnered with FICO back in 2015 to launch a platform that was called Lenny Credit. And Lenny Credit was, an iPhone app, that offered microloans from $100 to $500 and free FICO score and credit score education. So that's how it all started, with Lenny Credit. And, and then, it's a story of pivots after pivots. I bootstrapped that company as well, but this time around, I needed some, debt financing to grow the business. But we were the first market entrant, and it's good to be first, but it's very tough in the fintech world because bank had no idea what we were doing, and it was really hard to raise debt financing. And we almost had to close shop again until, at the very last minute, a Chinese fund reached out to us, to invest. I thought they wanted to invest in Lenny Credit, but we met with them in San Francisco, and after talking to them for about 30 minutes, they informed me that they actually wanted me to pivot to launch a bike share program. I mean, it was back in 2017. I had no idea what a bike share program was. And they told me that they would invest, $1.2 million if we made that pivot. Well, we pretty much had almost zero in the bank account. So, it was an easy decision. But what I did was I stuck with the vision and just adjusted the tactic. And I actually merged Lenny Credit with the bike share program that I ended up calling Lenny Bike. And I created a subscription-based bike share program that would also help consumers, and in this case, students, establish or build credit. Essentially, we'd extended a $600 line to students, and they would pay us, let's say, $20, $30 a month, and they could use the bike in an unlimited way. And we would report the payments to the credit bureaus. So we were scheduled to launch that platform in June of 2018. And then, Lime Bike raised $330 million. Bird raised $300 million. And we didn't have much, to compete. So we had to basically shut down that business model. But then I realized that I came up with the solution that used subscriptions to build or establish credit. Mm-hmm. And we were fortunate that a gentleman named Peter Mansfield, who was a founding member at Marqeta, was also one of our advisors. And he put us in contact with their CEO, with their team. And over the following 6 months, we essentially created the infrastructure around Grow Credit, which is essentially the first MasterCard, first credit card actually, that is strictly dedicated to processing subscription payments. So it's a credit card that can only be used to pay for services like Netflix, HBO Max, Disney Plus. And when we have premium plans where actually consumers can apply their balances towards their cell phone plan from AT&T, T-Mobile, Verizon, and Sprint. So the platform basically leaves between a secured card and an unsecured card, in a sense that it's an unsecured loan, but the funds can only be used towards specific subscriptions. So we launched the platform back in December 2019, about a year ago, and so far so good. Everything is we have closing in on 10,000 users organically, and we are planning on ramping pretty aggressively in the coming weeks, actually.
Right. So it's really interesting, Joe. I think that's it's such a innovative product that. So I just want to be clear. Then these people get a card and like they might have a Netflix subscription. Like what maybe you talk us through the different sort of levels that you have. I know you've got multiple plans that, because I know it starts off with a free plan that's really pretty basic. Tell us a little bit about the different levels.
Yeah, so we have three plans, and we are we're the first platform to actually help consumers establish a bill of credit for free. With our free plan, which is $15, which is completely free, but consumers have access to $15 in credit that they can use towards any subscription. Usually it would be maybe a Netflix or Spotify, but the way our platform is structured, we are actually reporting a credit line of $180 to credit bureaus. So it's 15 payments, 12 payments of $15 essentially. So we are essentially extending an unsecured loan of $180, which has a significant impact on the app store, on the credit score.
Right.
Consumers, have gained, around, 81% of our consumers, increased their scores by 30 points in 4 months. And it's trending towards about 61 points in 9 months. So the platform as a free service is effective. Then we have two premium plans. The first one is called the Grow membership, which is $4.99, and it gives access to $50 that the consumers can use towards the subscription that we offer, as well as their cell phone plan. And we have the Accelerate membership, which is $9.99 and gives access to $150 in credit. And they can apply those funds towards their cell phone bills as well.
Right. Okay. So a couple of questions that follow up from that. So when you get the card, do you have to say, like, you've got a Netflix subscription? Do you say, right, I'm going to use this for Netflix? Or does the cards come along and says Netflix is okayed, Spotify is okay, Amazon Prime is okay? How does it actually work?
Yeah, so the way the platform works is, the users sign up on the web or download the app, and they go through the onboarding process. We're working with Plaid, so they are approved, using Plaid. And so we are, the minimum income required is $1,200. So it's fairly accessible for most consumers. And then once we analyze, once we confirm that they have enough funds, enough income, we extend, we give them the opportunity to select one of the three plans. And then it works just like a catalog, essentially. Within the app itself, you have all the lists of the apps that we are offering. And the consumers also have the option to essentially, they can submit a subscription that they're interested in. And, we select the most voted subscription essentially to add on a regular basis. So it's user-generated platform, but we have 40 of the top subscriptions already on the platform. And then we are adding new ones, about two new subscriptions on a weekly basis.
Right. It's interesting. I read in a book recently for the subprime population that 1 in 8 Netflix charges results in a bank overdraft. So that 1 in 8 for the subprime population, which I thought was just staggering, that their Netflix fee is not costing them whatever it is, $12 a month or whatever. I know it's more than that now, but it's costing them $35 extra. So that to me was a staggering stat. But I wanted to just dig in a little bit on I'm curious about why would someone pay the $5 a month or the $10 a month? Is it worth that much to have that extra credit? I mean, I'm just trying to see why they would do that.
So, you want to look at, those plans as an accelerant. The basic plan, the free plan works. The other plans, keep in mind that with the free plan, we are reporting $180 to credit bureaus, right? But with the Grow membership, we are reporting a $600 loan to the credit bureaus. And right. With the Accelerate membership, we are reporting an $1,800 loan to the credit bureaus. And the larger balance has a significant impact on the credit score. So for users who are trying to, let's say, purchase a home or purchase a car, or are looking for an extra 30 or 40 points on their credit score, it makes sense. Because the savings that they generate, by benefiting from a cheaper financing cost are very significant. We're talking about, I remember when I had no credit score, my first car was a Ford ZX2 that cost me $350 a month. Okay.
Right.
So, with that, because my score was, maybe in the 590 or something like that, right? But with a score of 700 to 720, actually 719 or 720, we are looking at savings, substantial savings. For instance, a friend of mine, she had a great credit score and, an 800 credit score, actually, I remember. And her car payments for her Volkswagen Jetta was just $200. So we are talking about $150 savings, times 12. So that's $1,800 in savings, for the Grow membership for a $60 cost. So it just makes total sense, right, when a consumer is just trying to, basically improve their scores to obtain, cheaper financing costs.
So who is your target market? Is it the student that's just out of college or school? Is it someone who's trying to rebuild? I mean, who is the target market?
So that's the interesting part, right? We have, according to Experian, it's on the Experian website, before COVID-19, there was over 100 million consumers with no credit or thin credit files. Okay, pre-COVID-19. Post-COVID-19, we're looking at, maybe, 130 to 150 million consumers, who need our platform. So they're using Grow to either establish credit, or build credit. For instance, a student, coming out of college, they need to add more credit products. Essentially, a consumer is considered a thin file consumers if they have less than 5 trade lines on the credit reports. We are able to add a trade line for free to consumers. So for free, it gives them an opportunity to escape, being considered a thin file users. And when you have more than 5, trade lines, the credit score will be, significantly higher. Mm-hmm. So, that's the reason why, it makes sense to use Grow, for instance. But so we have users also who are coming out of bankruptcy and who are trying to reestablish their score. We have users who are trying to purchase a car or a home. Essentially, and a large number of the population, needs to build their credit to basically, because otherwise it's very expensive to be poor. So it's an opportunity to really to benefit from a cheaper cost of financing in general.
Right. That makes sense. So do you have a national footprint, or are you just working in certain states right now?
Yeah, so we're national, and that's we just launched nationally about a month ago. And we had a major press release, and we also announced our partnership with MasterCard, who joined us as a strategic partner, to help us expand, Grow nationwide. They have a similar vision than Grow, in the sense that they're really focusing on financial inclusion. And that's why, really our partnership made total sense. We've been working with, they've been following us for the past year, and they saw us going through an enormous amount of hurdles. They saw us partner with 4 banks, with Bridge Bank, MRV Banks, with Sutton Bank, and they saw us partner with Marqeta, with Five. So they saw us overcome an enormous amount of challenges, to reach this stage. And finally, when we completed actually our partnership with Blue Ridge Bank, which gave us nationwide coverage, this is really where it was a signal for them to give it a go, and we signed the partnership deal back in August. So really proud of working with them and being part of their financial inclusion initiative. Yeah, so the platform is available nationwide since January. We were available only in California for our premium plan, but our free plan have been available in nationwide since July.
Okay, got it. So then, what other sources of revenue are you going after? I imagine that there's a lot of ways you can take this, but maybe give us some ideas. I mean, is this just purely going to be a consumer play, or are you going after other sources of revenue?
Yeah, so we are generating revenue from the interchange revenue. So Each time,
Sure.
consumers, yeah. So that's once, when consumers are upgrading to our premium plans, so we're generating revenue this way. We have a good chunk of our users are actually tipping us. So we have about a significant amount of users who are giving us tips because we are delivering a true service that's valuable. So we're getting a good chunk of tips as well. And we are going to release a graduation credit card in April of 2021 in partnership with MRB Banks, our bank partner. So that's a card that we will offer to consumers who have spent at least a year on the platform. And if they met, if they made their payments on time and reach specific FICO score level, we would extend them, that credit card. And we are also generating revenue from subscription companies because our platform is actually essentially, we are delivering a high LTV audience. They are using our platform to establish a bill credit, and the subscription companies are more than happy to advertise on our platform to acquire those very valuable users.
Right, I was wondering about that because that's the thing. They're not going to cancel their Netflix subscription if they're using Netflix to establish their credit, are they?
Exactly.
Yeah.
Exactly.
Yes. Very interesting. Very interesting. So, what about how are you getting the word out? Like, what's your marketing plan? How are people finding out about Grow Credit?
Well, so we remember I ran a marketing platform, a mobile marketing platform, Free Apple back in 2010. So acquiring users on mobile, it's my expertise, my core expertise. So we have a lot of strategies, with the usual suspect, of course, Instagram and Facebook, the social media. But influencer marketing is going to be a good channel for us, and specifically because you have a pretty large amount of influencers who are focusing on helping their audience establish a bill credit. So it makes a lot of sense for them to promote us, which validates essentially their channel. Then we have a very interesting channel where we are going to be working with corporation to offer Grow as an employee benefit. So that's going to be a pretty significant channel for us. We already completed a partnership with a company called College Hunks Moving. It's over $100 million revenue company with close to 3,000 employees across the nation, and they are using us to essentially as a financial inclusion tool to help their workers, their employees establish a bill credit. And if their employees want to upgrade to one of our premium plan, they receive a 20% discount. So it's a win-win for the employees and for the employers as well. And that's a program that we're planning on expanding to much larger corporations. We are trying to talk to the Walmarts, McDonald's. Yeah. It's a complete win-win value proposition, for any corporation, actually.
Right. Well, I could see the corporation paying the whole fee and encouraging their. I think that's a huge market in many ways. That might be an easier way to scale your business. Yeah. I mean, long lead time, I know, to get those deals closed, but suddenly you add users by the thousands or tens of thousands potentially, because it's such a big problem, and they're really. I can see that. The thing that's interesting to me is that there is more awareness, it feels like, about credit scores today than there even was like 3 or 4 years ago. It feels like it just feels like it's everywhere. You see it on TV, Experian Boost, and other things that are really out there in the public eye. And I think that it's good timing, I imagine, for you. And that company, that consumers are hyper aware of their credit score much more than they used to be.
That is correct. It all started with Credit Karma. It did a fantastic job. They were really the first one. Especially pushing the free educational platform that they have. They monetize, of course, by promoting credit cards, but the awareness. They have over 100 million consumers, I think, by now. So they did a fantastic job, creating more awareness around the credit score. Experian Boost, launched their platform actually, I think last year, and their platform is solid. However, the credit improvement only happens on Experian, and the credit boost is actually very limited, and that's because there is no credit extension involved with Experian Boost. They are looking at the repayment history for utilities, but the entire FICO system was built to assess the repayment capability of a consumer. And to assess the repayment capability of consumers, you need a loan. You need to extend credit, and to see whether or not the consumers whether or not they will overextend themselves. So without that credit extension, the impact on the FICO score is very, very limited. So that's how we essentially contrast ourselves with Experian Boost, because we are actually extending some real credit, an unsecured credit line, and the impact is on all three credit bureaus. So essentially extending credit matters a lot if a consumer is attempting to have a significant impact on their credit scores.
Right. But the thing that Boost does is, it's free, it's simple, and it brings awareness to a credit score.
That is correct.
That in some ways I can see how, in some ways you could think that's a competitor to yours, but in other ways it's really it's almost like a lead gen in some ways.
It's a complementary.
Yeah, that's exactly. Yeah. So what's it been like, building this company? You said you launched in December of 2019. The pandemic hits in March. How has the pandemic impacted your company this year, particularly from your consumers, but also just in growing your company?
Well, that's very unusual because, of course, the pandemic is just a sad event. It's been a traumatic. But on the other hand, for us, we are one of those companies where it actually benefited us, which is really unusual because there was an article on the New York Times back in April, that identified that the industries that were gaining the most during the pandemic were video streaming and music streaming.
Right.
Everything else was going down, but music streaming, and this is where we benefit from it in the sense that, consumers, they might be cut off their cable, or other services, but, Netflix has become a sort of a necessity.
Yeah.
And now, we have consumers who are at home working, but now they can actually establish a bill of credit with a product that's actually an actual necessity. So it's been an unusual good match for us to a certain extent, where we make a lot of sense, during the current COVID-19 times.
Right. Okay. So then, as you think about adding new services on, do you have criteria? Like I imagine it'd be difficult for you to add something like a utility bill or something, because that just varies so wildly. I mean, is this something it has to be a fixed price, or how do you think about adding new services?
That is correct. We are adding DirecTV. That's we're planning on adding. We are avoiding. You're correct. We are avoiding services with variable costs because it's too dangerous.
Right.
What makes our platform secured is the fact that. And by the way, that is the one core reason why we added cell phone bills, because over the past 6-7 years, the cell phone industry has changed, has revolutionized itself by focusing more on a subscription type service.
Right.
We have plans for $30, unlimited plans nowadays. So that's why we focused on those types of services. But in the future, we are working with. We cannot mention the name of the players right now, but we are expecting to complete a partnership with a platform which enables us to instantly extend our reach to a variety of products, of services that we can integrate seamlessly with the Grow Credit app. So right now we only have 40 subscription, but by Q2 of 2021, it will probably grow to about 100. So that's through a partner that we're working with.
Right. Okay. And you said earlier that you're about to ramp up. Are you in 2021? I mean, how are you planning to scale this in 2021?
So we have a pretty aggressive pipeline. We're planning on acquiring about 1 million users in 2021 and 4 million users in 2022. We are partnering with a lot of actually fintech apps. Chime, because for instance, Chime is a complementary platform to ours.
Yep.
So there's a lot of fintech platform that we're going to do some co-branding and that we are going to do some co-marketing with, for instance. So we started to talk to Chime, and I think we're going complete a partnership fairly soon. And then, of course, the YouTube, as I mentioned earlier, our corporate initiative, it's going to be a multifaceted, strategy for us to reach consumers. But something that's interesting is the fact that, our ad assets are shared pretty extensively on social media, because the ability to build credit for free with Netflix is a pretty powerful value proposition.
Right, I can see that.
We tested. We already tested it, and it's been incredibly powerful. So we believe that social media and influencer marketing will be, our top channels from user acquisition standpoint, and fairly cheap because of the virality of the app itself. And we also have something pretty interesting. I think, I've never seen it in any other fintech apps before. We are enabling consumers to earn a $5 balance increase by sharing their app, the app with their friends. And that's been working pretty well. But what's interesting with this system, it's a complete win-win for everyone involved, right? The consumers share the app with their friends. They increase their balance by $5, and there's a direct correlation, of course, between a higher balance and a higher credit score. So you have a higher balance, a higher credit score, and your friends get to build their credit score at the same time. So it's a complete win-win system that we built, and that's generated a good chunk of our installs right now. So that embedded virality has worked out pretty well for us.
That's super interesting. And plus, you got the added benefit there where it becomes a social pressure almost to keep it going, kind of thing. How's your credit score going? That sort of thing. So
there's a lot of interesting play on that front later on to challenge, to have people challenging themselves to actually to increase their score.
So, sure. So that brings me on to my last question, and that is, there's a lot of ways you can take this. So what's your vision for Grow Credit? Where are you taking this company?
So, our goal is conquer the world. That's
good for you. Yes, may as well aim high.
That's our goal. Listen, we have, really the ability to become our entire goal is to deliver an enormous amount of value for our consumers, right? And with our initiatives to deliver discounts, to our users, we believe that it's going to help us grow dramatically, because not only consumers are able to of course build their credit, that's number one, but once they are able to save $50, $100 on their overall subscriptions, that's going to give us a lot of purchasing power, to be able to potentially demand lower rates on cell phone bills, for instance. So the idea is really to build a community which allows consumers to really obtain an enormous amount of savings. And this is really where we are going. Really the ability to use growth to build credit, obtain savings. And maybe there's the banking down the road. That's the neobank. We see. This is a possibility. That we could head into the banking realm down the road. Possibility, not sure, but who knows? Yes.
Okay. Well, yeah, it's super interesting, Joe. I appreciate you coming on the show today and sharing your story.
Thank you, Peter.
Okay. See ya. One of the big challenges I think for consumers starting out, either arriving in this country as an immigrant, or they're just leaving college and they're really starting out and trying to and getting a credit file for the first time, is that it's hard to break into the system, because you can get maybe a secured credit card with a $500 limit, and that doesn't really increase your credit score dramatically. It's not a way that really is going to help that much. What Grow Credit provides is a free way to really get a trade line, pay it down, and then graduate it up. And I could see how this, there hasn't been this sort of one company say, okay, when you start out and you want to go establish a credit score, this is what you need to go do. And that's what I think Grow Credit provides. So I wanted to get Joe on, even though his company is very young, but I think it's such it provides sort of a missing link in a way in the credit system. I think this company like this could be sort of the first natural step in a few years' time that everyone goes into when they're trying to establish their credit score. So I think it's a great idea, as I said. Anyway, on that note, I will sign off. I very much appreciate you listening, and I'll catch you next time. Bye. Today's episode was sponsored by Lendit Fintech Digital, the new online community for financial services innovators. Today's challenges are extraordinary, with the upheaval affecting all areas of finance. More than ever before, we need to come together as an industry to learn from each other and make sense of this new world. Join Lendit Fintech Digital to connect and learn all year long from your peers and from the fintech experts. Sign up today at digital.lendit.com.